Hey everybody, back with another video, and today we're going to be doing a little bit of an update on HP Inc., that is HPQ, because they had some very interesting news come out, particularly about their dividend, and there's not a bunch of new dividend companies that I'm really looking at, so doing an update on one that I did a little while ago is probably a good idea. The big news is that they are planning on increasing their dividend, or they have authorized an increase of their dividend to $1 per share a year, which will be 25 cents per dividend payment. And as we can see from the last few payments, that's going to be quite the increase, going from just under 20 cents to 25 cents. So right about a quarter of 25% increase there. Very nice. Quite the jump. Not something you see that often, especially with very large, very mature companies. If we actually look at the news that came out, we can see that they announced an annual dividend increase of about 29% to $1 per share. And then we have a bunch of other news that we can really add that dividend into to see how things are going to go. The biggest thing is what their estimates are for their free cash flow for 2022, which they're looking at about $4.5 billion, and going back to their previous cash flow. Now, our 2021 is missing here, but we can look at 2020, and we can see that that 4.5 is going to be more than all of the previous 5 years. Much more than 2020, and $500 million more than 2019 and 2018. So if their estimates are correct, it's not necessary that they will be, but if they are correct, that's going to be a very nice increase in free cash flow, which is something we like to see. And we can estimate our payout ratio if that does come to pass. If they do make that $4.5 billion in free cash flow with $1 per dividend per their 1.15 billion shares, that's going to be about a 25.5%, we'll say 25% payout ratio, which is very healthy for them. Half of our ideal range of 50%, so they'll have plenty of room to pay out that dividend. There won't be any worries about that for that year, and if that free cash flow stays around that number, it'll still be a very safe dividend. Moving over to the income side of things, they were looking at EPS of $4.07 to $4.27. If we'll go ahead and bring that down to the 4.07 just to be safe, that would give them income of about that's a little over, right around $4.25 billion, which again, if we do our payout ratio there, again, we're right at about 25% of income if that earnings per share turns out to be true, if their income works out that way, right about the same as their free cash flow, slightly less, but not by a lot, about 1% less, but again, well under our 50% ideal ratio, really good to look at. One other thing is that they are planning to return all of their free cash flow in 2022 to shareholders through that dividend and share repurchases. Now, this does leave me a bit worried. I love seeing the dividend increase, that's great, and I don't have a problem with share repurchases when a company has the free cash flow to do so. It's very good. It's a good way to reward investors. However, returning 100% of free cash flow to investors does have problems when the company sits like HPQ does. As we can see here, current assets are about 20 billion, while current liabilities are about 26 billion. So they are underwater on their current bills. I would like to see them use some of that free cash flow to pay down that debt. Once they've done that, like if these numbers were flipped, if this was 26 versus 20 billion in assets versus liabilities, then this wouldn't worry me as much. I'd still like to see, a little bit of those liabilities get paid down, and their long-term liabilities as well, their total liabilities, I should say, they are slightly underwater. That I really do want to see them deal with. If they've got $4.5 billion in free cash flow, why not use, $500 million to $1 billion of that to pay down those liabilities, try to get their head above water debt-wise. That's what I would like to see, but as you guys know from watching my videos, my hatred of debt is pretty clear and not that common when it comes to investors. So that's just me. If you're looking at HPQ, just keep that in mind, that they have that debt issue, so to speak, and they're using all of their free cash flow to return money to investors, which is great for investors in the short term, but in the long term, if we really want to see that dividend increase, but they have a lot of debt, that can lead to issues. And besides that, that's really all about it for HPQ. I mean, if you guys, I know a lot of people have been looking at it. I harped on it a lot in the past, saying that it was pretty undervalued. It's currently trading at about $30 a share, which is very good, considering that's a PE of about under 10 here. So it's definitely not an overpriced company, even for a very, very old, or relatively old, I should say, mature company. A 10 PE is still pretty low. Being somewhere between 12 and 15 would probably be more reasonable. So there's probably some room to run here. They aren't even back to their recent high, which was, $35. So, you might have some room to run there, plus getting that dividend. Again, the only thing I would really worry about is that debt. I really want to see them address that. How are they going to deal with getting themselves above water? Because, if the economy decides to, tank, or if interest rates go up, that debt suddenly becomes a much bigger issue, and that dividend might not be as safe as it is currently. Another thing is looking at their dividend history. This is we're not probably going to see another 20-something% increase in their dividend. I would expect that if they do continue increasing their dividend every year, I would expect these 1 to 2 cent increases to be the norm. This year was just kind of between what's going on socially, economically, and everything. This year has just been a really a standout year for HPQ. So that 29% increase, again, that's probably going to be the only one. So just keep that in mind. It's probably not going to be a regular thing. I could still foresee dividend increases if they keep doing what they're doing, but again, it's probably going to be that 1 or 2 cent increase, not that huge, 20 cent increase that we're getting this year, this upcoming quarter. And that's about it. I hope it helped, and thanks for watching.